All right, good morning, everybody. So there's been a little talk of a dead cat bounce. We don't have one yet. It looked like we were starting to get one, and then look, maybe some energy news came out and kind of dialed that back a little bit. Like we usually do, we want to start out with a perspective of what happened in the overnight hours around the world. If there's anything that really stands out, we want to make sure we understand, what it is and how it may impact our trading day. Nothing really standing out, so that moves us right into the economics of the day. It looks like the president is going to be speaking. It's a tentative schedule, meaning they don't quite know if that's when he's going to show up. And then European central banker is on the books as well. These are my time zone numbers. So for Biden, it says 10. That means sometime around 11-ish. And for the ECB, it says 12. So around 1 o'clock. Yesterday, they had Brainerd on there, and he never showed, or I never seen anything show up on FX Street. So I don't know. It could have been a pre-recorded session. It could have, it could have been a lot of different things. Either way, if he was speaking, they never posted a link. Um, and whatever he said didn't make enough news to even show up on FX Street. It really didn't make sense for him to be out there yesterday, anyways, other than as a part of that plunge protection team. All right, so that brings us over to the Think or Swim. Go to Market Watch calendar. You can move things around, so I tend to bring that description over next to the time. If yours is really cluttered, say it looks like this, just full of all kinds of stuff, you can uncheck everything and then just turn on Econo Day event. Makes it a little bit easier. We got manufacturing at 8:30 with the PPI final, and then additional auctions at 11 and 11:30. That's it. The other ones are later in the night, and for other nations will be done by then. So 8:30, 11, and 11:30. You do got to keep in mind it is a Fed week, so it's also OPEX week. You have to anticipate that, generally speaking, things would be slowing down at this point. We would expect the market to begin consolidating and kind of basing, waiting for that news to come out. The market has already priced in a significant amount of rate hikes, including a surprise 75-pointer. The Fed has not given any signal like that, which, if they're trying to surprise the market, they wouldn't give that signal, right? I think it's just a bunch of hooey that everybody's hyping themselves up about what the Fed needs to do. And the Fed is just trucking along doing what it said it was going to do. So, there is a whole lot of angst right now about the Fed being behind the curve and having dropped the ball and not having any trust. Well, it wouldn't appear that they would gain trust by telling people 50 and then hitting them with a 75. So it's all speculation anyways. At the end of the day, we don't know. We have to wait on the Fed. We are primed for a dead cat bounce. We are primed for a red to green setup. It wouldn't be an inside day on most products since we broke so far down yesterday. Right? We're not looking at an IX10 per se. We could stay inside of today's range easily, and it would be the expected thing to do. Just from the idea that we have fallen a long ways, and if we were to stabilize even momentarily while we wait for the Fed, that this would be the range that we stabilize in, 38.78 to 37.35. That would be yesterday's range. If we do get an inside day breakout, it would be after traveling all the way back up and out the top of yesterday's range, and or a continuation to the downside. there's a lot going on that says we could make a move to the downside. Even on a regular dead cat bounce or a little bit of a bear market rally, this one has pretty much fizzled out. You can see how there's a lot of price action that we moved in the overnight hours and then already have given it back. Right? It tried to rally last night and that failed. And now we're right back basically where we were last night. We're up 0.25% this morning. So with that in mind, we always want to game it out. What is on the agenda for today? If the entirety of yesterday is the range that we're focused on, then that's a really large range, and it would make things easier if we break it down into kind of quadrants or zones. And with that in mind, taking, say, the low of the Globex to the low of yesterday, the RTH low of yesterday, that would be a really good starting point. That would give us one quadrant. From the Globex low to the Globex high, that would give us another. And then from the Globex high all the way up to where we started the week, that would give us our third. If you wanted to split that up a little bit, you could try to do something like where we opened, but it appears that either way you try to break it apart, there's going to be one of these small ranges. I like to have at least 3, but really if you just want 2, it would kind of make more sense. Globex high to Globex low, or Globex high to yesterday's low, I guess would make more sense. Those 2 quadrants right there, it would still be inside day, right, through all of that. So we want to kind of game it out. If we were to get all the way to the top of this box, 38.79, that would be the bottom of the gap, at which point we would anticipate a significant resistance. Should we get through that, we have to get to the top of the gap. And to even make it to that, we would have to get through Friday's low, institutional pivot point. So from that point of view, we do have a lot of overhead resistance. All of that would entail the same pivot points that we would always use. Open, high, low, close of yesterday, the Globex open, the Globex close, the open, high, low, close of the days before that on Friday. From where we closed, the ADR high would be 38.61. Right now we have an ADR of 2.68. And from the other way, looking at it to the downside, 36.60 would be the ADR to the downside. We are most certainly not done with these lows. A bit of a rally, maybe we get a dead cat bounce. We in some way make a move up off of these lows a bit, perhaps, if this dead cat bounce actually sticks and comes through. And then after that, right back down, because we're not done. There's still a long ways to go before we're done. And so temper, kind of temper your enthusiasm for any kind of swings. Continue to trade what you have, not what you think. This was the decline from the last swing, 10.21% decline. It happened in 4 bars and it took 5 days. Right? That was that last little rollover. So when you start to broaden it out a little bit, these rallies are getting shorter and shorter. And the declines were increasing. I don't think this decline is done, which is why this one's in white rather than orange with its peers. I only measured what we had, right? And right now we don't have a higher low. So that measure's not done. All right, looking at the 10-day, 30-minute chart, the volume profile is way up here. And we are way down here. If we were going to start working our way back up, as we had mentioned, there's significant levels of resistance all the way back to those previous levels, 40.25, 39.25, 3,800-ish. And it's a fractured chart, right? You see all this damage in there, but that significant level of volume between 41.70 and 40.70, that's going to be controlling the screen, especially through the morning today, where this volume that we're seeing here on the left is strictly the volume from just right now, right? So every day, every hour that goes by, we're going to continue to wipe out these candles up here. And of course, we will build more volume down here and we'll reshape this thing. All right, we do have the weekly expected move over our head, and that May 20 low, it's still a critical level, also over our head. We know it's still critical. It's where we came into contact with it last night and failed to get through it. This morning, we've been flirting with VWAP and failing to get through it. There's no point of control to carry forward from yesterday, but there is a value area high if you was interested in bringing it across. It's really close to the RTH high. So an argument could be made that perhaps you wouldn't quite need it, but the value area high from yesterday, 38.17, could be brought through as well. There is an untouched point of control from Friday. The entire volume profile from Friday could be carried across, especially since we have not come back and made contact with that point of control. That's a valid, untouched point of control, but it's a significant distance over our head. It's a long ways away. It needs to be marked. We want to carry it forward, but there's no expectation that we're going to see it today. All right, so we talked about the volume profile, or the weekly expected move. We made it outside of the box yesterday. We are still outside of the box this morning. Generally speaking, when we get outside of the box, we expect the market to get back inside the box, right? But after having made this significant move to the downside, it's not going to be a lot of surprise if we get nothing today and we just kind of range sideways waiting for that Fed. If there is going to be a dead cat bounce today or a bear market rally today, there's every expectation that we have to have the sectors come in, right? We need to have finance, technology, or consumer discretionary. And so far this morning, looking around, we sure don't have a lot of that yet. Yet's the key word. But we want to be aware of that, kind of be looking for it as we get closer to the open. So the ADR in the NASDAQ right now is 3.5. That would be the orange line on the chart, 11,774 to the upside and 10,960 to the downside. If this is the base that we're going to be building along these lows for the temporary time frame, then there's every possibility that we revisit the low of yesterday or an earlier part of the Globex low. If this is going to base today, then this is very likely going to be our range, right? Staying inside of yesterday's RTH session. When we think about yesterday, though, it really should encompass all of yesterday, including the Globex. But the way these things usually play out is that we stay within the RTH as we build that base. What you really want to be watching for, guys, is that capitulation move. The sell-off that we've had in the last few days, that was not capitulation. That was not the last hurrah. It was not everybody puking it up and calling it quits. We're a long, long ways from that. So even the sell-off that we had, it wasn't extreme. It wasn't violent. We barely showed any real change in volatility as opposed to what we would have expected to see. So what you want to be watching for, even though we're all waiting on the Fed, even though we're all carrying this expectation that we're just going to basically range today or maybe get a dead cat bounce, look for significant levels of sell-off that continues. Yesterday's advanced decline lines were pegged out at 100. There was literally no stocks yesterday running in the opposite direction. And yet we kept seeing the futures themselves have those rallies, right? And they were good size rallies. It was because the institutions are directly connected and directly trading right into the futures rather than the basket of stocks like they normally would. That was a lot of volume in the marketplace with a complete and total negative breadth. We want to see that continue the other direction today. I want to see if it's going to pick up at all. This was the breadth from yesterday, from the 9:30 open. This is the NASDAQ, by the way. And as you can see, all the way up until noon, it was just pegged out 100% negative all the way across the board. Right. And even when it started to pick up a little bit, all the other signals didn't really come around to help it out. Same thing with the S&P. Sure, it tried to come up off of those lows a little bit, but it stayed in super negative territory all day. Call it, it's like pegged out. All right, for this morning, I've already adjusted it. We've got the pre-market change percent. I knocked it down to 100 names because I don't really want to look at the S&P 500. Although they don't give us a chance to look at, the S&P 100. So we got to use what we got. I just adjusted by weight. So I used that filter, knocked down the market cap. Gave it a color adjustment so the colors would pop a little sooner. And you can see we've got a pretty mixed bag. Energy has been up on the year, right? It's been the dog that has just continued to hunt. So it made sense that yesterday when we had selling across the board in everything, that energy was one of the biggest hit. Makes perfect sense. It's not done, by the way. And for everybody who was complaining to me saying, oh man, I missed it. You think I can get into energy? You think I can get into energy? I think now you have a potential opportunity to get into energy finally, because it gave you a really good pullback. And I'm not telling everybody to run out there and start buying into energy, but if you were looking at that parabolic move that we've been having in energy this year, and you really didn't get any of it yet, hey, it pulled back. Is that a good time to get in? I mean, not just because it pulled back, no, but at least it's off those highs and you can begin thinking about, how do I want to get into this thing? Having said that, this is a very odd market. If you listen to history, the way that we would normally slip into a bear market, you don't normally have one sector like that that bucks the trend and goes the other way. So it kind of has everybody a little flummoxed that it's not doing what a quote typical bear market looks like. But there's also been a lot of talk that it's not going to end anytime soon. So, you know what they talk about with strong begets strong, and that until the chart changes, trade what you have, not what you think. What do you have? Energy. There's a really strong sector that has pulled back. For everybody who likes to trend trade, getting in on a pullback does mean you're getting in after a red day, or 2 red days, or 3 red days. All right, so looking at it, we can see the market cap by the size of the box. So the monsters of tech, the MOT, stand out really easy, right? Microsoft, Google, Apple, Meta, Amazon, Tesla. But if you think about the size of some of these boxes, you can also notice things like uh, department or in their own sector or industry or sub-industry, the energy, some banking names. For anybody who's joined my daytime streaming, we lump these 3 together. Bank of America, Wells Fargo, JP Morgan. We tend to stick them all into a group, breaking down the financials into smaller peer groups. All right, we're going to change that from the S&P 500 to the NASDAQ 100. Adjust the color scheme again. Monsters of Tech stands out. It's the big boxes. Notice that health technology and consumer durables, Pepsi, for an example, was up yesterday. I don't know how it ended, but I know earlier in the day yesterday, when I was looking at what was crossing back into the positive territory, it was Pepsi was on that list. It would make perfect sense that whatever was up yesterday, and there was only 5 names, so it shouldn't be hard to figure out what was up. Whatever was up yesterday is very likely going to be down today. The screener is where we really start getting into it. Right now, we're asking how many names in the S&P 100, because it does let you use the S&P 100 here. How many names in there are up at least 0.5% this morning? 25, 26. So we say it with a percentage. 26% of the S&P 100 is up this morning, at least 0.5%. That's not too bad. It doesn't give me that warm, fuzzy feeling. I don't consider it to be aggressively bullish this morning, but it could turn into something. So it's not just the names that we see up this morning. It's what do those names represent? What sector, what industry, and how much are they up? You know, if they get a pre-market rally of 2, 3, 4%, it doesn't leave us very much to get into as we come into that open, right? But we're off of those session highs, or the Globex highs at least. In the futures, it kind of gives everybody an opportunity to get in, but it's got to carry through. So we're going to be looking for the MOT to lead us this morning and the other sectors to fall into place. It's really important to keep in mind we have to have that leadership, right? If we don't, and we just see a very large market breadth, which that's going to be the sneaky part today. If you see 60, 70, 80 names advancing and they're not the MOT, then it's very likely just going to be chop and disorganized clutter sitting inside of yesterday's range. That market breadth will lie to you because the S&P doesn't need 100 names advancing to go up. It only needs the monsters of tech. And behind that, it just needs its three sectors: finance, technology, consumer discretionary. And those names are the MOT, right? So careful with that today. If you see 75, 80 names out of 100 all going up, it does not mean that we're going up or that we're going to have some great rally. All right, so that's the S&P. I want to take it over to the NASDAQ and ask the same question. How many names in the NASDAQ are up this morning? At least a half of a percent. 36% of the NASDAQ. It's not bad. Again, it's a little bit, right? But we got to see these numbers really start to turn around. And it's who in there, right, that really matters. Some of these China names, Baidu, Alibaba, they don't hold a lot of weight for, seeing those up and thinking, oh yeah, we're going to get a rally in the S&P or in the NASDAQ. Nah. But I will say though, they are on the FANGs list. You can trade the FANGs as a symbol if you have the European exchange, ICE. And if you open up that symbol and look at the names that are inside of it, right? What's the constituents inside of that symbol? Baidu and Alibaba and Twitter, and a couple other names that you wouldn't expect, they're in that list. And so just kind of keep that in mind. All right, so looking at the sectors, Bitcoin's down, and home construction, which is more probably not down. It's just a lack of any pre-market trading, right? Pre-market and after hours is not distinguished here. It won't tell you one versus the other. You have to actually just look and see which one. Gold, the financial XLF. Now on XLF, I mean it's maintaining, so it's not dumping, but the market is down. We are crossing through some pivotal levels. The S&P is almost back to flat. So it makes sense to see the sectors start to fade out. For the names or the sectors that are up this morning, a half of a percent is kind of my benchmark. It's my starting point. That'd be natural gas, emerging markets, energy, the other kind of energy. So we got XOP and XLE. Really want to keep our eye on the bonds. That's been a large part of the angst, right? A large part of the grief of what's been going on in the market. And keep in mind that the market is primed for an R2G, right? A red to green play today, but it's got to come through, right? We got to get through this open and into the market. So give it the time to do that. Otherwise, carry the expectation that it won't be subtle, guys. Kind of game this out. If it's a bear market rally, go back and look at the last few days when we were getting that upward move off of the May 20 low, right? Just kind of back up. It wasn't very long ago when we were sitting at the lows and we were just kind of dribbling along down there, holding that sideways basing pattern. And then we rallied up out of it for 2 days. It was an extreme flow, rip your face off rally. And it was very simple to see, very obvious, right? But it took 3 days of bouncing around at those lows before we got that. It's very likely, especially with MOC today or FOMC tomorrow, that we're just going to base around like we did back here. And that after they report on Wednesday, good or bad, that it would be that move that we're all looking for. The but part, like, but if we break the low of yesterday, it is very likely that we're going to have yet again another low like yesterday, right? That it will get, the buying will disappear. It'll be a bidless beast, and we will make significant moves to the downside with conviction. So it won't be subtle, right? And that's what you want to be looking for. Otherwise, that wishy-washy, choppy, sideways, half nothing market is just going to chew you up, and you're going to burn commissions, right? So that's why I got everybody. Be careful, be safe. I will see all of you tomorrow.